Chip stocks, meanwhile, giving back some of yesterday's gains. The sector moved higher after OpenAI and Broadcom announced a custom chip deal, and Broadcom was sharply higher, but it's down today. In the last few minutes, Oracle announcing it's going to deploy 50,000 graphics processors from AMD starting in the second half of 2026. Joining us now, Stacy Rasgon, in Bernstein, U.S. Semiconductor Managing Director and a senior analyst. And I don't know if you were ever wondering why'd I get into this area of finance, but God, the last couple of years, this is where it's at, Stacy. It's hard to even keep track.
It's been unbelievable. It's certainly been a ride.
I mean, it used to be. You remember memory? It used to bore you to death. I guess there were those, we used to call them field FPGAs, field programmable Gatorade, we called it, where you could pick orange.
Yeah.
You could get grape if you wanted, if you're out on the field. But they were gate arrays. Then graphics chips and CPUs. But now AI changed everything. And I don't even know. I mean, I need to go back to school to really understand it. Did you do that? Some remedial work?
Well, you know, it's my graduate work in semis is probably 20 years out of date at this point. But we've been here and there on it. Yeah.
So AMD eclipses Intel. Intel's got some government help and maybe inducing some private companies to get involved, or they're public. But I mean, it's how do you navigate it at this point? What are your favorites?
Yeah, it's been pretty wild, right? And you're right. We've got winners and losers like massively changing place, and we've got government investment, if you maybe want to call it government interference, but that's there, and a lot of crosstalk between a lot of the companies, especially in the AI ecosystem. There's a lot of cross investments and things like that where it's sort of tying them all together. They'll all sink or swim, I guess, in one piece at some point. In terms of what we like, my general call this year has mostly been own the high quality AI names and ignore most of the rest. And by and large, like that's kind of worked. Like we've liked NVIDIA, we've liked Broadcom. I still think that the AI cycle, I think we're still early. I think it's still got legs, and all of these new deals that we've been seeing announced, they actually, I think, have the effect of extending it even longer. Most of these don't even start to ship until the end of next year. So if you're worried about air pockets or digestion or anything like that, it's clearly not this year. It doesn't seem like it's next year. And if these big projects don't even start to ship until the end of next year, it's probably not 2027 either. I think we've got some runway on this still. So we still like those high quality AI names.
Hey, Stacy, we have Jared Bernstein joining us in, I don't know, maybe 20 minutes. And he has an op-ed out that says he thinks it's time to call the third bubble of our century the AI bubble. He says in financial markets, a bubble occurs when the level of investment in an asset becomes persistently detached from the amount of profit that asset could plausibly generate. Why do you think he's wrong?
Well, I mean, it's certainly a concern that people do have. I think there's a few things of and I think it really is that question on profitability. There's no question on demand right now, right? Nobody can get enough. That's the one sort of overarching theme that we're hearing from everybody in the space is demand for compute is off the charts. It's not like the tech bubble maybe where, I mean, we have dark fiber sitting in the ground today, from 2000, 2001. Fiber that was installed and never used. Everything is getting used. Like nobody's buying GPUs and sticking them on a shelf in a warehouse somewhere. Like they are all getting deployed and getting used, and they can't get enough. So it really is that question on profitability and the revenue that this can drive. And yeah, I guess you could compare it. You could make the argument that the revenue will never be there. At the same time, though, it's still early in this. And you can look at other build-outs. Like you can look at the build-out of AWS back in the days. That required heavy investment. And it wasn't profitable at first, and nothing's profitable when you're on the early phase of the ramp.
OpenAI says it needs at least $1 trillion to invest in data centers that provide the electricity, computing power, and storage unit, but they've only got $13 billion in profits this year, in revenues this year, not in profits.
Now, but again, we're early and we're in ramp phase, so that becomes the question: can they actually drive revenue? Is this actually going to be something that is completely ubiquitous, or is it not? And I think time will tell. We'll have to see. I tend to be more on the bullish side of AI. I actually do think the demand is there, and I think there's enough effort chasing this. We're already seeing evidence, frankly, of at least on the enterprise side of returns. Like it's early, like it's in the experimental phase. But we're seeing evidence on the enterprise side. And then on the hyperscale side, I think there's already getting returns on this. You have to remember the folks that are building this stuff out, and this is one other difference maybe from, say 2000, 2001. The companies that are doing the bulk of the spending are some of the most well-funded and most profitable businesses that humanity has ever developed. And they're not idiots, right? And they can see things that we can't. And they've also got other businesses that they're running this stuff through that they're already getting returns on. Google's getting returns on the stuff. Meta's getting returns.
That sounds like it's different this time, though. But some of the circular financing and some of the companies that are in these weird incestuous relationships with each other where they're each dependent on the other for. Yeah. It reminds me a little bit. Remember the mergers back in the .com? You would exchange, two overpriced cats for one overpriced dog, and none of the stock was real. So none of the valuations were real. I don't know if any of that's similar, but even yesterday, Pat Gelsinger said there's no doubt we're in some type of bubble, not one that's ready to pop, and maybe. I get everyone points to NVIDIA's valuation is not anywhere near. Stratospheric. In terms of the multiple to earnings or sales, it's not so bad.
Maybe. Look, so I'm not sure Gel's ability to speak on this, frankly, but that's neither here nor there. Like we'll be
hear
good.
Okay.
In terms of some of these like quote unquote circular range, look. So the biggie was NVIDIA, right? And that $100 billion number kind of raised eyebrows. Remember, it's not $100 billion right away. It's $10 billion. It's at first. It's actually staged with the notes. So I think that's good. And look, like NVIDIA doesn't have anything else to do with their cash, right? They're generating hundreds of billions of dollars of free cash flow, right? They can't do M&A. They have a dividend and a buyback, but relative to their market cap, it's tiny. So like I'm hard-pressed to think of anything better that they could do with that cash than to grow and support the overall AI ecosystem. And the money's not going into the ether. Like they're getting what will presumably be valuable OpenAI stock, like I guess at that point. And you have to remember, even with that $100 billion, assuming they deploy it, OpenAI is going to need a lot more money than that. Like, they're not going to be the only investors in there by a mile. To me, the AMD one raises a little more eyebrows. AMD actually gave OpenAI, they gave them equity, like, in return for being allowed to sell them stuff. Although I kind of understand that as well. Like, AMD, look, like, Lisa has to be on the OpenAI rocket ship. It really is OpenAI and Altman that's driving a lot of this. And if AMD is not there, they completely lose out. So Lisa had to get on that rocket as any way she could. She bought her ticket. It's working. Like I'm not going to knock them. Like their is going up, but I would read that in some sense in terms of like the relative competitiveness of the products. Like nobody else had to give up something in return for the privilege of selling to them.